Laura Champine is Director of Research and Senior Consumer Analyst at Lowe. Laura, the inflection point is coming, just as you called it. Welcome.
Thanks for having me, Kelly. Yeah, we're pleased to see the reaction because we started this day with Home Depot up half as much as the market. It looks like we might end twice as much as the market. So nice to see an outperformer try to outperform today.
And what do you attribute that to? Normally we'd say, hey, it was a solid quarter, but the outlook was light and the shares are down, such and such. It's interesting that that's not taking place.
Some of this is just buy-side positioning, where knowing that the first time you hear from a company to start the year, they're not meaning to set a pretty aggressive target, at least a sophisticated team like Home Depot. So not wanting to own it before the print, but then being willing to buy after conservative guidance is out there. Some of it is just digging through what they said on their conference call. They're very happy with the SRS acquisition. They're being very conservative on a potential housing-related spending recovery in the back half that I think most of us analysts who follow the industry closely think we're likely to see.
So it's interesting that comes also at a time when we were just having a discussion, and we've been talking since Friday, about some signs of a weakening consumer. You'd think Home Depot would suffer from that potentially. Are they somewhat insulated?
What we're really calling is that this is a gap in the momentum. So I attended the big furniture show in Vegas in January. The mood was ebullient. People were really excited about demand. We're talking about a Trump bump. Then we hit February. You see some insecurities around tariffs. Are they happening or are they not? You see some employment issues, especially if you're a federal worker. You hear that inflation is not done yet. I think we're in an air pocket for sales, which we would expect to recover over time in sectors like this, which have seen a big downdraft coming out of COVID as we tailed off the pull forward demand. These sectors, big ticket home remodelings that have trended down double digits in the past couple of years, we should see a recovery or at least not another backslide year this year in 25.
Not to pivot away from Home Depot, Laura, but now that this is kind of baked in, I'm just looking across your coverage space. You've still got a buy on Ross and Burlington. We've heard some concern that immigration could be a hit there. We'll see, obviously, as they start to report. You've been a hold on some of the cruise lines and companies like Crocs, where we are now starting to see a little bit more weakness. So what is your kind of broad message here? Or is it a broad message, or is it just really company specific right now?
Because I'm a bottoms-up analyst, I've got to think of it company-specific. So for Crocs, for example, we don't love casual shoes. We think that more formal shoes, you often see when times become a little more conservative, people dressing up more. And we're starting to see footwear makers push the sneakers and the Crocs to the back of the store. We, on the off-pricers, when there's inflation, off-price takes share, and the department stores just don't look good. Right now, off-price is about half the market share in apparel and accessories compared to the peak of department stores. There's still room for them to grow. The cruise lines were neutral on most of them because they had a great run, but there are places there to get excited, like Viking, which recently went public, has an under-levered balance sheet, a lot of growth opportunity in ocean cruising. So we're going to be stock pickers this year, and we think the market will reward that.